going to start at MF Global. You have a story today just kind of detailing more of the details. That's terrible, right?
Yeah.
We have more details about the MF Global, the missing money, where it went, how it got there. Why don't you break that down for us?
So investigators are starting to find some of the money. We don't have all 1.6 billion. They don't have all 1.6 billion, but they're starting to find different trades that look suspicious and may help explain how they got to that point.
Right. We have some idea of how this, what the customer money that wasn't supposed to be touched, how it got touched, and where it may have gone, right?
Right.
That's the real issue.
The big time frame for this was just a 3 or 4 day period as the run on the bank happened. You really had a bad earnings report on a Tuesday, and then from there till Friday into Saturday, you had a run on the bank, the firm sort of trying to pull everything together to keep the firm alive day to day. And during that period, they dipped into customer funds in a way that was chaotic, that folks involved with the case say it may not have been immediately clear when they started dipping in, but at the end of the week, when they kind of said, wow, what just happened here, they looked like, well, the money's short in the customer funds. Now, that is very unsatisfying to a lot of customers. They say, well, how could it be so disorganized that you wouldn't know that you're dipping into this sort of sacrosanct area?
Yeah, I mean, one of the things that really surprised me was this idea of this manually inputted spreadsheet that was used to keep track. I mean, it seems like a sort of digital set of Post-it notes. I mean, is that normal?
You know, it's a very good question. I mean, MF Global was a pretty big player in this small area of exchange-traded derivatives, and so in that space, it was regarded as a pretty sophisticated player. Just about 2 weeks before the bankruptcy, one of the people that are featured in our story today, Edith O'Brien, the assistant treasurer at MF Global, was speaking to a panel about how to prepare for Dodd-Frank from the futures industry's perspective. So this is a firm that had the respect in the industry, and people were very surprised how the back office, the actual nuts and bolts of making the trains run on time, was really in disarray.
Right.
And so that really showed two things. One is that the systems weren't as good as people thought. They were kind of cobbled together from various mergers over the years. MF Global bought a big chunk of Refco after its bankruptcy, and so there were a lot of moving parts, and the firm didn't work very cohesively together. But the other point is that you really don't know how strong these systems are until you're tested in an emergency, like the late October period was for MF.
It sounds like a movie that just came out recently, doesn't it?
Yeah.
It's interesting. My question to you is at this point, now we're getting more of these details, we're finding out what actually happened.
Right.
Is this going to, is this more fuel for people who said that there was some criminal activity going on down there? I mean, whether or not they knew they were dipping into the customer funds, obviously they weren't supposed to. How does this affect any kind of criminal cases? Well, I know no one's been charged with anything.
Right, no one's been charged yet with wrongdoing, but the two trades that are in our story this morning, both shed light on who was involved with the trades and sort of the amounts of money we're talking about here. $165 million in one trade, which happened on the Wednesday before the bankruptcy, and $175 million that happened on a Friday before the bankruptcy. And in both those cases, Ms. O'Brien was involved, John Corzine was involved with one of them, various people in New York on the fixed income trading desk were involved, and so these are folks who are going to be, or already really are being questioned in the sense of like, okay, how did this happen? What did you know? The main defense seems to be that they weren't knowledgeable that what they were dipping into was customer money, because again, one of the weaknesses in the rules in futures that's been exposed by this is that there's really just one big account. When you put your money into a futures account, you have $50,000 there. The firm you're dealing with can put money in the same account, say $30,000, and basically it's all sitting in one account. They can dip into that 30, but once they dip into your money, that's when the problems start. And so it needs to be more clear where the money is,
that
whose
seems
money
like
is
a very
who.
strange way to sequester customer money. I mean, it seems like you're not doing it at all.
Yeah, I mean, it's much different than what you'd get at a bank account or an online securities account at a brokerage firm. The reason it's different historically has been because futures customers deal a lot on margin, and so they're putting in $10,000, but they're actually controlling or investing in a contract worth 10 times that. So they want to have that extra money on the side so that when the markets get volatile, they don't have to wire more money in. It's just sitting there as a cushion. So it's almost like a convenience for the customer.
So then the last question is we have to run along here.
Not anymore.
So now we're tracking the money. Is the money being returned to some of the customers? Where does all that stand?
Well, it's a it's a long road now for customers because the easy money has been returned. The trustee in charge of that, James Giddens, has made a couple of distributions already and returned somewhere in the range of 70% of the money back. But for the other 30%, Giddens has said it's going to take a long time because he's probably going to have to litigate and get money back from other parties. And there's counter litigation where people might be trying to get money from him to send to other parts of MF Global's remaining branches in bankruptcy.
Yeah.